Good day, guys. Welcome to Forex Walker. Welcome to episode 94. Today is the 12th of March 2024. Hope you can see the mouse all the way down there on the bottom right corner. Today we have uh, we want to catch up with you on the previous trades that we took, and we ended up taking profit because we were less informed, and that is one of the mistakes that we do. Once you miss a central bank meeting minutes with another currency, because I'm monitoring about 16 separate currencies, the major currencies and the emerging economies. So what happened is that I took for granted a few FOMC's meetings, and that was both on the Australian dollar and the New Zealand dollar, where they announced that they are on the New Zealand dollar. They announced that they are going to be holding interest rates until the inflation drops all the way down to the 2% benchmark, and the Australian dollar, which I believe from my own research that they've introduced a hawkish interest rate cut. So intentionally, what they were doing is that they were trying to provide an interest, what they call a soft landing on their inflation, and they introduced the current three interest rate cuts. And after that, they held for a short space of time, and when they were done, they introduced interest rate hikes. So once you miss one FOMC's meeting, what happens is that, okay, when I was holding the trades, I understood that the AUD was hiking rates, and the implications that come thereof after an interest rate hiking cycle have been introduced. So what happens is that I expect a tiny bullish move and a huge pullback after those interest rate cuts and interest rate hikes. And after that, I expect a long-term bullish move that I can hold. So currently, the interest rate hikes are pushing the Australian dollar, and I'm expecting a bearish move soon, especially with the war in Iran, where they're busy. The Iranian, I think they call them Shahed drones. They're busy hitting oil refineries in the Persian Gulf, in the countries like Kuwait, Saudi Arabia, and all of those countries like Qatar. So what happens is that the more they continue to hit those refineries, what will happen is that the price, as you can see here, uh, we had a peak on the WTI crude oil, and as it dropped all the way down there, we had a reversal. The same thing is shown on the volatility index, which I'll be showing you in the future. So what happens is that this turnaround happened. Okay, we had a spike and a turnaround because things were calming down, and after that, the Iranians continued to hit those oil refineries, especially because the Iranian Navy port actually, their ships, the naval ships at the port were targeted by the United States. They are lying to us, and they're saying they're not receiving coordinates from those Gulf countries, but in reality they are. So they're receiving targeting coordinates. That's how they were able to send Tomahawk missiles to destroy those naval ships. And that's the reason why I believe when things were calming down, uh, Iran decided to start hitting those oil refineries to force those Gulf countries to at least remove or announce an eviction of U.S. militants in their own countries. So this reversal happened as a result of those oil refineries being hit, and I'm trying to combine that with the current interest rate hikes in the Australian dollar. The reason why I'm expecting a pullback that is a little bit bigger, but after that we'll get a bullish move that is even larger. So that pullback is expected looking into Australia and New Zealand buying crude oil from those Gulf countries, Saudi Arabia, Qatar, United Arab Emirates, and with those oil refineries being hit, we understand that those countries like Australia and New Zealand will be affected, but they in their stockpiles, Australia and New Zealand, they have about 30 days of crude oil, and if they don't get the supplies as those oil refineries are being hit and waiting for maintenance, if they don't, they're not able to supply those uh, uh, crude oil supplies. What will happen is that the currencies that will help with the pullback in those currencies. So remember, crude oil transports the retail prices, the retail sales. It controls it because uh, all retail products are transported using trucks, which is diesel, and many other things like gas and all of that. So, with this interest rate hiking cycle showing up, I'm expecting a pullback and a hold in interest rates. And let's look into macroeconomics. What we were targeting uh, at the 50% of this level. This gray line was our take profit level, which was hit over here, and the market reversed and it continued to move higher. However, we're expecting a pullback that will be at least as soon as we break above the first cutting cycle level. This is where we introduced interest rate cuts, the hawkish cuts. I'm not sure if you can see the rate cuts on this line. Let me show it to you. Here we have those things I don't want to show themselves, but those are the areas where I spoke about the interest rate cuts. Now I'm having problems with my charting systems. Let me show you again. So we are expecting a break above at least up here, and after that we're expecting let me show you. We're expecting a raise up here and a pullback that is even bigger. That's why I have this line over here, and a takeoff that will take off that will move even higher, supporting the interest rate hiking cycle in Australia at the moment. So let's move to, oh man, I'm having issues now. Let's move to the volatility index. So the volatility index gave us what looks like a spike, and that was expected by us on this drawing. And after that spike, what happened is that we had some kind of a pullback into that spike, and that pullback happens because uh, things are deteriorating. The conditions of the war are escalating, and that's why we have that on the WTI crude oil, because the oil refineries are being struck, and geopolitics is telling us that this war, since the Iranians are not willing to come to the negotiating table, since previously they were targeted, their country was bombed for them agreeing to come to the negotiating table. So I don't believe they're willing I don't believe they will come to the negotiating table. I believe everything will happen from the Iranians deciding whether the war ends or not. So in this case, the Iranians are in charge and nobody else is in charge. So they spoke about their intentions of flattening the country of Israel. The largest cities like Tel Aviv and I forgot the others, but they're willing to flatten all urban areas and leave the country looking like Gaza. So that's why I'm expecting this pullback. If I get a little bit of a calm down, a second pullback, since you see here we had a down and we had a pullback. If we get something like this, then I'll be it will be much easier for me to hold shorts, to hold longs on the current currency pairs that I'm holding, which are safe havens. I'm selling safe havens. So here the Euro AUD shows us that it continues to collapse all the way down there, and I'm because of that the euro had actually collapsed, and the collapse was caused because the European countries are buying crude oil from those Gulf countries, Qatar, UAE, uh, Bahrain, Saudi Arabia. They buy crude oil from those countries, and when the Gulf of Hormuz is closed, what happens is that the first countries to suffer are the Europeans, and that's the reason why it is more difficult to hold longs on the. As you can see here, they hit the previous low where I was expecting a hold, but they still hit it. So it becomes those European countries are the first to be hit because they buy crude oil from over there. And the European countries or the United States is preventing them from buying uh, Russian oil. And for that, the Canadian dollar becomes an alternative. And that's the reason why I'm currently holding longs on the Canadian dollar. So here we'll see what happens with the European currency. But normally, many countries have about 30 days of reserves before they go bankrupt. And with the war continuing to get worse and worse, I don't believe that the euro will recover. I believe it will continue to collapse all the way down there as time goes. So this is the alternative, which is the cat CHF. Here we're having problems with the safe haven, the CHF, but the cat seems to be doing exactly what we were expecting, and so the cat continues to pull higher and higher, and I'm well invested in this trade. Especially for those who talk about strategies, I don't really have a strategy. I'm a Wyckoff schematic trader, and you can see that these are my previous shoulders, and you can see that the lowest previous shoulder was here, and these ones are equal lows, so I don't count them as previous shoulders. So what happened is that we got below the two previous shoulders, the first one being here and the second one being down here. So the market reversed into my buy stops. And so normally what I do is that I just place a buy stop here waiting for the market to reverse, and it taps me in into the market. That's how I enter the market. I don't know anything about strategies, so don't ask me about strategies. I'm not good with that because, especially because those are for price action traders. I use market fundamentals and market sentiment, geopolitics, and the central bank meeting minutes. That's what I use to invest into the market. So this is the CAT JPY, and you can see that the pullbacks were priced in and the market took off. It never came back. So thank you guys. I'll see you on the next episode. Goodbye.